Hey Amalodians, welcome to Amaloded YouTube channel. In today's video, I'm going to reveal the number one reason why you are not profitable. It is because you have not accepted the gospel truth of forex trading. Do not be deceived by social media lifestyle. Forex trading comes with ups and downs. Majority of traders started trading with half knowledge or wrong information about trading, all in the name of trying to flip $50 account to $20,000 in a week. I can tell you for free, that is not the reality of trading. A lot of traders were selling quick lifestyle pictures on Instagram, Twitter. Meanwhile, that is not the real truth about forex trading. Trading is a long term game that requires a lot of patience, commitment. Yes, trading comes with losses, and losses are inevitable. Until you see loss as a fee you must pay to get better at trading, you can never be profitable. And also, jumping from one strategy to another will not help you because every strategy has its own losing and winning phase. In this video, I'm going to show you the easy blueprint formula you need to stick to all the time to make money in the forex market. And if you enjoy this, go and click on the like and subscribe button. Turn on the notification button so that you can be the first to get notification when next we upload another exclusive forex video tutorial. As a professional price action trader, you need to stick to certain blueprint formula that you can use all the time whenever you open your charting platform. According to Amaloded Forex Blueprint, the number one formula that I always establish whenever I open my chart is to establish market structure. Either the market is trending up or trending down, bullish or bearish trend. The second one is to establish the major key levels. The third one is to predefine entry system. Your preparation before you execute, before you press buy or sell, determines your psychology, how you can manage that trade. You need to prepare yourself. Okay, how you are going to enter a certain trade or a certain setup. And you also need to predefine your exit system. And my number one rule is to make trend my friend. You also need to emulate this formula. Make trend your friend. If the market is trending up, giving bullish structure, or the market is giving bearish structure on the bigger picture, you just have to scale down to the lower time frame and start trading in accordance with what the market is showing on the higher time frame. Let me take you guys to chart by following this blueprint formula. The first one, establish the structure, mark major key levels, and also predefine entry system, predefine exit system. Let's go, guys. The first pair I want to analyze this week is pounds US dollar, pounds US dollar. On the daily time frame of pounds US dollar, you guys will agree with me that whenever the market is trending up, you are going to see a fissure like this: high, higher, low, higher, high, higher, low, higher, high. Whenever market is giving a pattern formation like this, is a sign that the market is trending up. The buyers are the one ruling the market. And what you have to do as a professional price action trader is to scale down to the lower time frame and start using your strategy to execute any buy setup by using your long entry tools on trading view. And other way around, if the market sentiment on the higher picture says that the market is giving low, lower high, lower low, lower high, lower low, what you have to do as a professional price action trader is to scale down to the lower time frame or your entry time frame and start looking for sell opportunity, because the bigger or overall market direction shows that this market is what is trending upward. Remember our rule number one. The number one rule says establish market structure. On the daily time frame of pounds US dollar, you guys will agree with me that this market is bullish. The market is trending up and the buyers are the one dominating the market, because the the last trend was bearish market, right? The market was trending. As a result, you can see the downtrend line was taken out, was invalidated, whereby the last lower high in this market was taken out. The previous market direction says that this market was giving us low, lower high, lower low, lower high. Then we have lower low. And the rule says that when you are trading a downtrend market, how to know whether the downtrend market is not valid, you have to establish the last lower high in a downtrend market. When market is giving lower high, lower low structure, and the last lower high, the rule says that it must not be taken out. Price must not trade above this. Price can give us a pullback structure like this, higher, low, and give us equal high, then sell to the downside. But in a situation whereby market is not doing something like that, market give us a pullback structure like this, then eventually it take out this lower high, that shows that the market is now back to a bullish market. Then you have to change your sentiment as a price action trader to bullish sentiment, because the price has changed the direction of the market to bullish market. Now that the same thing happened on pounds US dollar on the daily time frame. You can see that the downtrend trend line has been intersected to the upper side, and that is confirmation 1. And then the confirmation 2, the recent lower high on the daily time frame has been taken out. That changes our bias to bullish sentiment. Now what you have to do is to write it out, that on your using a text tool on the trading view, that daily time frame, the number 1 according to our formula says that the daily time frame is bullish. That shows that we are looking for buy opportunity. Now the rule number 2 says that we need to establish the major key levels. Then that's when you need to establish support and the resistance. The recent resistance that price broken now turned to support. Now if you check the historical data event, you will agree with me that where is the recent key levels? Then we need to mark out the recent key levels around this zone here. Let me change my rectangle. Then you have to go to your trading tools and pick rectangle tools. Let me change it to extension. Now in a market condition like this, you can see that we have this recent support level here. Remember, this zone was serving as a resistance before, and if you check the historical data, you can see that price also reacted around this key level, which makes it a valid key zone on the daily time frame. And then we need to find another key levels. You can see this place is also another major key levels on the daily time frame, whereby price reacted around this zone, price reacted here, price reacted here, price reacted here, multiple price rejection around that zone. Those are the 2 solid nearby key zones to the recent price action. Now you can see the momentum on the daily time frame here. When the price took out the structure here, what happened? We need to start observing the momentum of the candlestick. You can see the volume of this candlestick here, high volume, then the volume of this candlestick reduced, and look at the candlestick volume of the next one, high volume here, and then price consolidated around this zone a little bit. Then we have bullish engulfing to continue the bullish sentiment. Look at the next volume here and look at the last candlestick volume here. That shows that the buyers are strongly dominating this market. And where is going to be our entry system on our third formula is we have to predefine our entry system. On the daily time frame, you will see that this zone is our point of interest, whereby we want this price to give us a pullback around this zone, then we take a buy opportunity, or we want this guy to give us a pullback here, then we take a buy opportunity. And we can also make use of our trend line by connecting this trough to the next trough here. That shows that if this recent support here did not hold the price to buy to the upper side, then we are expecting price to settle down to this place here, so that we can take a long opportunity turning to the upper side. And what you have to do is scale down to the 4 hours time frame to understand the price action on the 4 hours time frame as well. The overall picture says that this market is bullish, right? Then on the lower time frame, which is 4 hour intraday time frame, says that this market is also bullish. Let us look at the structure of this time frame. You can see that we have higher high, higher low here, higher high here. Then we also have higher low here. Then we have higher high here. And then where is the recent support on the 4 hours time frame? This place happens to be the recent support on the 4 hours time frame. So we are expecting price to give us a pullback here. Then we can take a buy opportunity. That is where we are using as our what? Our entry zone, our point of interest. Then we have to label it here around this zone here by using our text tool to write it there, our point of interest around this zone here. And this is going to be our point of interest too, if in case the first PO high did not hold the price. So this place is going to be point of interest 1, then point of interest 2. Then with the moment the price comes down to this key level zone, what we have to do, as you all know, our entry time frame 30 minutes and a 1 hour time frame. Then we have to scale down to the 30-minute time frame. And the moment price sells down to this zone here, then what we have to do is to pay attention to the reaction of the price action. Number 1, we need to see the volume reduction of the candlestick. We need to see multiple week rejection around this zone. Then finally, we need to pay attention to the reversal candlestick pattern. So with the moment the price sells down to this zone here, what we are expecting now is price to form low volume of the seller's candlestick pattern. Then we need bullish reversal candlestick pattern. And what are the bullish reversal candlestick pattern? Then we have tweezer bottom, hammer, doji, bullish engulfing, 3 white soldiers, bullish piercing. Any of these candlesticks represent bullish reversal candlestick pattern. Whenever you spot either of these candlesticks, they execute without hesitation. That is what we are using as our what? As our entry system. Then the last one on the list, predefined exit system. So when we are exiting, then we have to target the next key level, the next resistance level, and this will serve as the next resistance level, which is going to be our exit system here. That if price is able to hold around this zone here, this price is able to hold at this support zone here, and this next resistance level is going to be our exit zone. Simple as ABC. You don't need to stress yourself. That's why I have taken my time to prepare this easy guide blueprint that you guys can use as a guide whenever you are analyzing the market. You don't need to stress yourself. You don't need to stress yourself. I was not opportune to have access to this kind of formula when I started trading many years ago, but trading is now easy. Just develop a certain blueprint formula that you can always revisit every morning or whenever you want to analyze the market. Now, the next pair on our list that we are watching this week is Euro USD. On Euro USD, you can see that on the daily time frame of Euro USD is also bullish, right? The initial downtrend market was invalidated around this zone here, whereby if you see the downtrend line, it was invalidated. The downtrend line was intercepted like few weeks ago, which makes the uptrend a valid uptrend line, and this will serve as the last lower high in a downtrend market. Then we are now having higher high here, higher low, then we are having higher high here. So after establishing our market structure according to this formula is to establish the market structure. The next one is to establish our major key levels. Now on the daily time frame, where is our major key levels? You will agree with me that we have a major key level zones around this zone here. Then we also have another major key levels here. You can fine tune it very well. We also have another major key level zone here. So what we are expecting now is price to give us a pullback around this zone. Then we take a buy opportunity. to the upper side or price come to this second point of interest, then we take a buy opportunity to the upper side. Either of these two zones, these two support zones, will give us this buy opportunity this week. I am certain. Remember, all analysis are in probabilities. Market has the final say, but you just have to follow your blueprint formula and your trading system or strategy to stick to your analysis. If your analysis says that you should buy without following the crowd, without listening to any other trader signal. Just stick to what you analyze. So the third formula says that we should predefine our entry system. That's why we have to scale down to 30-minute time frame or 1 hour time frame. Either of these time frame will give us our entry system. So we want the price to sell down to this place. The moment the price sells down to our point of interest, we want to pay attention to the reaction of the candlestick. Number one, we need to see volume reduction. Then we need to see weak rejection around this zone here. Then the third one, then we need to see bullish reversal candlestick pattern like bullish piercing, 3 white soldiers, bullish engulfing, hammer, dodgy, tweezer top, like that. So any of these bullish reversal candlestick will provide us full information to execute our system without hesitation. So this place is going to be our label 1 as point of interest 1, while this place is going to be our point of interest 2. And if you scale down to the 4 hours time frame, we can also establish our uptrend line here to establish that this market is actually an uptrend market. So we're expecting the market to give us a pullback down to this one here, then we take a buy opportunity, then or a pullback down to this place, then we take a buy opportunity. Now the third on our list is AUD US dollar. And if you look at AUD US dollar daily time frame, you also agree with me that this market is also bullish, whereby the market is giving us swing low to swing high, swing higher low, then we're having another swing high here. So remember, for like few weeks or two to 3 weeks, market was consolidating on the daily time frame of AUD US dollar. So what we're expecting the market to do now is price to retrace back to the consolidation. This place is serving as a support zone here. Our sentiment says that this market is bullish structure. Then the next one is price to retrace back to this zone here. And where are the key levels? We need to establish our key level zones around this zone here. So we need to fine tune this guy. These are the key level zones here. Then we also have another key level zones around this zone here. So if we scale down to 4 hours time frame, we need to establish our uptrend market to give us a confirmation that this market is actually a bullish market. There is our uptrend market here. So what we are expecting now is price to give us a pullback back around this key level zone. Then we take a buy opportunity, or price comes down to this key level zone, then we take another buy opportunity. Remember, our entry system remains the same. So this place is going to be our entry system 1, entry system 2, while our exit system is going to be the next resistance zone. So if we execute our long setup, this place is going to be our exit zone here. So our POI1, if you enter from here, we're exiting at the next resistance zone here, or if you are entering this setup here, we're exiting around this zone here using our bullish reversal candlestick pattern. Now the next one on the list is gold. Remember, those of us that watched my last week market analysis, all the analysis went successfully on gold. I told you guys that I'm expecting gold to give us a pullback around this zone here. As a result, gold already intersected the downtrend line. And where is the last support level? Then this place was the recent support level. I said I was expecting gold to give us a pullback here. Then gold is going gold will now buy. That was the prediction that I forecasted last week, and it went successfully. Though this week again, we are also going to do another top-down market analysis. And first thing, according to our formula, says that we should establish the market structure. So where is the direction on the higher time frame? The Prediction on the higher time frame says that this market is strongly bullish, whereby the last lower high here in a downtrend market was intercepted. It has been invalidated, right? This was serving as a last lower high during this downtrend market. Lower low, lower high, lower low, lower high, then equal low. What happened? Instead of price to give us lower low, price failed, then price give us higher high. Then we're not having higher low, we're having higher high now. So our sentiment now is priced to retrace back at this resistance level, now turn to support after being taken out. So according to our second formula says that we should establish major key levels. Now on the daily time frame, now where is the major key levels? We have our major key levels around this zone here. So we are expecting this price to give us a retracement back to this zone. Then we take a buy opportunity. We can also establish our uptrend line zone like this. So it is going to be a perfect example. We have a major key support zone, we have another trend line zone around this place here. So if you are executing our entry system at this support zone, this place is going to be our exit zone. So this place is going to be our point of interest. Then we are exiting around this zone here this week. So our direction, our bias for this week is to buy on gold. So let's see what is happening on 4 hours time frame. So if in case price did not enter, if the price did not retrace back around this zone here, so what I'm anticipating is price to break this 4 hours time frame. Yeah, we can see this 4 hours time is serving as resistance here. So I will expect 4 hour candlestick to break this guy to the upper side, then wait for a pullback here, then and I will execute. So this is going to be my point of interest one. I need price to break this to the upper side, then give me a pullback here, or price to come back around this, give me a pullback here, then I will buy. Those are my 2 points of interest. My point of interest 1, then point of interest 2. My sentiment for the week is to buy on gold. Now the next pair on our watch list is USDJPY. On the daily time frame, you can see that this market is strongly bearish market, right? And if you look at this trend on the daily time frame, price gave us double top here. Price was trending last week, right? Price was trending last week in a downtrend market. In an uptrend market, we're expecting market to break the recent higher high. But in a situation whereby price give us higher low, then fails to break the recent higher high, price now forms what? Equal high, then take out this recent higher low. That shows that the trend has changed to the downtrend market. So we're expecting a pullback to give us lower high, lower low, lower high, lower low. And that was what happened last week on USDJPY. Price free to break this resistance here to give us lower high. Instead of giving us lower high, price gave us equal high, then gave us a double top. So equal high is also known as double top, and double top represents bearish reversal chart pattern. So what we are expecting is price to give us a retracement back at this key zone here. So we want this guy to give us a pullback here so that we can take a sell opportunity to the downside. So we are shorting this market here. We are using this zone as our entry system zone, our point of interest. Then this support zone here is going to be our take profit zone here. This support here is going to be our take profit zone on USDJPY. And another confirmation is to draw this our uptrend line. You can see that the uptrend line here has been invalidated. It has been intercepted, right? Price just intercepted it last week. You understand? So the daily candlestick just closed below it now. So there's tendency for it to give us a pullback here before selling, or sells down here, give us the pullback, then sell again. So another pair on our watch list is NZD US dollar. On NZD, NZD JPY, you can see the same thing is happening on the daily time frame. Price just formed what? A clear double top here, and the double top represents bearish reversal candlestick pattern. So what we're anticipating is price to give us a pullback at the neckline of this double top here so that we can take a sell opportunity to the downside. This is very simple. All you have to do is to follow this easy blueprint formula that I've created for you guys. You don't need to stress yourself. You don't need to go through a long journey before you get it right in this forex business. Remember, in a quick recap, the first formula you have to establish is market structure. Establish the major key levels in accordance to the trend of the market. Then the third one, predefine entry system. The fourth one, predefined exit system. These things are very, very important. These are your preparation before you press buy or sell. You don't need to press buy and start planning where you want to exit your trade. You need to predefine all these things before you enter buy or sell in the market. And please kindly click the subscribe button, like, and turn on the notification so that you can be the first to receive our next exclusive video tutorial. Supporting us to do these 3 things will help YouTube to recommend our exclusive video to other people and also boost our YouTube channel algorithm. And if there's any trading system you want us to do the video tutorial, you can notify us in the comment section. See you next time, guys.